Are you saying that the Federal Reserve should not raise in December, Peter, or should it even, dare I say, cut rates?
No, look, it should raise rates, but the market's going to collapse as a result.
Do you know how many of you tweeted me, Peter Schiff is an idiot, Peter Schiff is awesome? I mean, Peter Schiff of Euro Pacific Capital and his take on the Fed was one of the most widely viewed pieces on foxbusiness.com in the last 24 hours. It really got you guys riled up. So we thought, let's find out, are the Federal Reserve Chief Jay Powell and company derailing or about to collapse the recovery, as President Trump claims and as Peter Schiff says they'll get the blame? What does this mean as we head into the midterm elections? We're going to bring in the man whose views on economic policy for Keefe, Bruyette & Woods help the bank make investment decisions. It's a Fox Business exclusive. That guy's Brian Gardner, Washington policy analyst at KBW and Stifel Company. Gardner, you worked on Capitol Hill. Brian, sorry, I didn't mean to call you by your last name there.
It's okay.
But we're kind of like Clayman and Gardner. Yeah. Let us tackle the Fed first. Botch. That word is loaded, and yet you're using it. In which way are you saying that the economy will be botched?
I think it's a potential risk that if the Fed is overly aggressive in raising rates, that it could hamper the economic expansion, the recovery, whatever you want to call it, as well as the market. And I think that's what the market has been generally worried about over the last couple of weeks, and has been a contributing factor, maybe even a primary contributing factor, to the volatility in the market. And is the Fed going to get overly aggressive in raising rates? And so I think that is a risk going forward.
Are they behind the curve? I've got to ask this because Janet Yellen, and this was Peter's point yesterday, took way too long. Alan Greenspan screwed everything up. You know, he named everybody. But should we now pause, even as we have a market with a Dow that's at 24,791? We were talking about April of 1970. The Dow was at like 900 points. I mean, it was nothing.
So, you know, to Peter's point, and I didn't see all of his comments, but, you know, I don't think the market's worried about December. They're worried about next year, whether there's 3 or 4 increases next year. December is already kind of factored in, and that's a foregone conclusion. How aggressive is the Fed going to be next year? And so I don't think we can say the Fed is behind the curve as much right now for the 2019 forecast. I think so. After we get through December, there's going to be another 5 months between now and the following March meeting, March 2019, when they would probably next consider raising rates. There's a lot of economic data that's going to come between now and then. So I think the Fed is leaning towards raising rates in March then, but they're not married to it. And so I think they're going to take the time that they have between now and then to figure out what they're going to do next. So I think it's premature to say that they're behind the curve.
Okay, premature to say they're behind. Make your midterm call as it pertains to investing around and through it.
Okay, so we think that the Senate is likely to stay Republican. The House is probably going to flip, but only by a handful of seats. It's going to be close. I think there are some investors who overly worry about a Democratic House and what it could mean to economic and policy, especially regarding banks and financials. And our advice is take a deep breath, pause, don't worry about it, because the regulatory policy that the Trump administration has put in place and will continue to put in place is really kind of immune from electoral politics. It's in the hands of the regulators. All the Trump nominees, or most of them, are in place, and the election's not going to upset that. So don't worry too much. If you wake up on Wednesday morning of next week and there's a Democratic House, sure, there's going to be some bad headlines or negative headlines coming out for bank stocks. There are going to be more investigations, especially of the largest banks. But when you look behind the headlines and you look to the actual policies, we think policies are going to continue to evolve in a pro-bank stock manner.